It was the best of times, it was the worst of times, wrote Charles Dickens in his famous book, A Tale of Two Cities. And that feels like a good description of where we're at right now in the crypto markets. On the one hand, there's never been more awareness of crypto. Bitcoin is a daily topic on the major networks, and a record number of new users are joining the blockchain revolution. And on the other hand, the markets are down and there's little recovery in sight. Crypto prices are in a slump and nobody is sure when things are going to change. So just what the heck is going on? It's a State of the Markets episode, so stick around for this week's Exodus Crypto News. Thanks for joining us, everybody. The story of the last few months has been buying the dip, only to find out that the dip isn't done dipping. $40,000 BTC seemed like a really good deal until we crashed to $30,000 a few weeks later. So Bitcoin is currently down about 40% since May 1st and down more than 50% from its peak of $64,000. The situation with Ethereum is even worse. It's down 57% from its peak of $4,300 on May 12th. So what's keeping the world's two most popular cryptocurrencies down in the ditch? Well, nobody knows for sure, but the following couple of factors probably have a lot to do with it. One, the Chinese mining ban is reverberating through the market, and Bitcoin's hash rate is still down 44% from its peak. So investors must be staying on the sidelines, wondering if another country is going to ban Bitcoin. Then there's some worry about whether the grayscale unlock of BTC could lead to massive selling pressure in the market, even though it doesn't really work like that. So there's a bit of concern that if we break $30,000, it's a fast drop to $25,000 due to market makers hedging their options contracts. And finally, the ESG narrative isn't doing Bitcoin any favors. Ever since Tesla announced that they would stop accepting BTC, institutional investors have become increasingly hesitant to buy an asset that might not get the green, environmentally friendly checkmark. Now, with this big slurry of bearish news, the question we have to ask is, where do we go from here? The Bitcoin Report Bennett Weekly has pointed out that velocity on the Bitcoin network is at an all-time low of 195% compared to the recent high of 593% that happened on May 23rd. The total volume transacted on the Bitcoin network has also been down to a level that we haven't seen since December of 2020. Based on this information, some analysts are calling for the crypto markets to head even lower in the coming weeks. Now, on the other hand, on-chain analysts like William Clemente and Willy Woo are quick to point out that Bitcoin outflows from exchanges are increasing. Long-term hodlers are doubling down on their positions, and miners are also accumulating coins. Since miners seem to be some of the smartest market participants around, this is a good indicator that the markets could be close to bottoming. At the end of the day, it's really anyone's guess what happens next. However, with another big stimulus bill in the works and EIP 1559 going live on Ethereum at the end of July, maybe a turnaround in the markets isn't as far away as many people imagine. So it looks like a few government ministries are ratcheting up the pressure against crypto and all the infrastructure that supports it. Here's the latest from the European front lines. The United Kingdom's Financial Conduct Authority is allocating $15 million for a digital marketing campaign to, get this, warn young investors about the dangers of buying cryptocurrency. Really? According to Nikhil Rathi, who's the chief executive of the FCA, young investors need to know that if they invest in crypto, they should, and I quote here, be prepared to lose all their money. Everyone knows that crypto is volatile, but saying that you could lose all your money seems a bit hyperbolic. Bitcoin is the best performing asset of all time, while 99.999% of everyone who plays the lottery never makes their money back. Besides warning people about what can go wrong when you buy crypto, the UK is taking a hard line against Binance. The financial authorities want the exchange gone starting yesterday. Something similar is happening in Italy, where the securities regulator Consob has claimed that Binance is not authorized to operate within Italian borders. Is this just the start of an all-out war against Binance in Europe? Well, it could be, but that doesn't mean it's a crypto battle everywhere. Across the pond here in the US, Jerome Powell, who's the chairman of the Federal Reserve, recently testified that stablecoins should be more strictly regulated within the United States. According to Powell, stablecoins should conform to the same regulations as bank deposits or market funds. Although regulation is a toxic word in the crypto community, truthfully, and hear me out here, a bit of stablecoin regulation might not be the worst thing in the world. In fact, when it comes to this next point, stablecoin regulation could actually be the jet fuel that takes crypto to the next level. Powell, much to our surprise, actually argued that the USA might not even need a government-controlled CBDC. That's right. He's offering in favor of stablecoins. Now, although it's not an official policy, Powell speculated that a well-regulated stablecoin market might be all that America needs to upgrade its outdated financial system. All this time, people have been worrying about how the Fed coin is going to destroy crypto. And then the chairman of the Federal Reserve comes out and says that, hey, actually stablecoins might be a better solution. Who would have guessed it? Another optimistic note is that the London Hardfork is going live on Ethereum at the end of the month. The Hardfork will introduce a lot of updates, including EIP 3198, EIP 3529, EIP 3541, and EIP 3554. However, the Ethereum improvement protocol that everyone's really looking forward to is EIP 1559, which is going to change Ethereum so that the network burns a portion of all the gas fees. Ethereans are expecting that once EIP 1559 goes live, enough gas fees are going to get burnt that it meaningfully reduces the liquid supply of Ethereum. Constant demand and reduced supply means higher prices for ETH. If you want to know more about the London Hardfork, be sure to check out the Exodus blog where we break down the upgrade in detail. Thanks for watching, everyone, and make sure to hit those like and subscribe buttons for more great video content from Exodus, and until next time, hold on.